Stop whatever you are doing right now. I need you to hear this. Today is Tuesday, June 23rd, 2026, and something is happening in the gold and silver market right now that every single investor watching this needs to fully understand before Thursday morning arrives. Because Thursday is not just another day. Thursday is the day that could reset the entire direction of precious metals for the rest of 2026. And if you do not understand what is coming, if you do not understand what is happening right now today and why, you are going to be completely blindsided by what Thursday brings. So I am asking you to give me your full attention for the next 15 minutes. Put your phone down, close the other tabs, because what I am about to share with you is the most important thing you will hear about gold and silver this week. And I promise you, by the end of this video, you will see this market in a completely different way than you did when you clicked play. My name is John A.G., and on this channel, we do not chase headlines. We do not repeat the same talking points you hear everywhere else. We go deeper. We look at the actual data. We connect the dots that most people miss. And today, the dots are connecting in a way that is both alarming and full of opportunity at the same time. So let us get into it. Here is what is happening right now. As of this morning, gold is trading at approximately $4,130 per ounce. That is down 1.5% today. 1.5% in a single day for gold is a meaningful move. Gold does not move like that without a serious reason. But what is happening to silver is even more striking. Silver is currently trading between $62.80 and $63.80 per ounce. That is a drop of 3.5% today alone. And when you look at where silver was just 24 hours ago, sitting near $66, that means silver has lost approximately $3 in a single day. $3 gone overnight, while most investors were not paying attention. Now here's the first thing I want you to notice. Silver fell more than twice as hard as gold today. Gold down 1.5%, silver down 3.5%. That is not random. That gap tells you something specific about what is driving this market right now. And understanding that gap is the first key to understanding everything that follows. But before I explain why silver is falling harder than gold, I want to zoom out for a moment and give you the full picture of where we are, because context matters enormously here. Silver hit an all-time high of $121.67 per ounce on January 29, 2026. That was the peak. That was the moment when it felt like every silver investor's dream was finally becoming real. And from that peak, silver has now fallen to $63. That is a decline of more than 47% in less than 5 months. Nearly half its value erased. And gold, which peaked near $5,589 per ounce earlier this year, is now sitting at $4,130, also down significantly from its highs. Both metals are under enormous pressure, and today's moves are not the end of that pressure. They are a continuation of something that started weeks ago and has a very specific cause that I am going to explain to you right now. The cause is the Federal Reserve. More specifically, it is what the Federal Reserve signaled to the world last week and how the market is now pricing that signal into every asset class, including gold and silver. Let me take you back to last week because that is where this week's pain was born. On June 16th and 17th, the Federal Reserve held its monthly policy meeting. It was chaired for the first time by Kevin Warsh, the new Fed chairman appointed by President Trump. The Fed decided to hold interest rates unchanged at 3.5% to 3.75%. On the surface, that sounds like nothing happened, but what happened beneath the surface was enormous. Because when the Fed released its summary of economic projections, the document that shows where each policymaker thinks rates will go, the numbers were striking. 9 out of 18 Federal Reserve policymakers are now projecting at least one interest rate increase before the end of 2026. 9 out of 18. Half the committee believes rates need to go higher, and markets are currently pricing in an 89% probability of a rate hike by December 2026. Let me say that again because I want it to land properly. 89%. Nearly 9 in 10 professional traders in the most sophisticated financial markets on earth believe the Federal Reserve is going to raise interest rates before this year ends. And on top of that, Kevin Warsh did something that sent a very specific message to markets. He removed all forward guidance from the Fed's communication. For 14 years, the Federal Reserve has been in the habit of telling markets in advance what direction policy is heading. It gave investors a roadmap. It gave certainty. Warsh ended that practice entirely. He essentially told the world, we are going to decide at each meeting based on the data we have in front of us at that time. No roadmap, no pre-commitments, no dot plot from the chair himself. Pure uncertainty going forward. Now I want you to feel what that means as an investor. Imagine you are driving on a highway at night and someone turns off all the road signs. You can still drive. You can still see the road directly in front of you, but you have no idea what is coming around the next corner. You slow down. You become cautious. You do not make big confident moves because you cannot see where the road leads. That is exactly what Warsh did to financial markets last week. He turned off the road signs. And when investors become uncertain, they move out of risky assets and into safe, predictable, income-generating ones. And gold and silver, which pay no income at all, are among the first things they sell. This is the mechanism that is crushing gold and silver today. When the Fed signals higher rates, two things happen simultaneously. First, the opportunity cost of holding gold and silver rises. Why hold an asset that pays you nothing when you can hold a government bond that pays you 4 or 5% per year with almost zero risk? Every dollar in gold and silver is a dollar not earning income somewhere else, and as rate hike expectations rise, that opportunity cost rises with it. Second, the US dollar gets stronger. Because higher interest rates in America attract capital from all over the world. Investors everywhere buy dollars to access those higher rates. More demand for dollars means a stronger dollar, and because gold and silver are both priced in dollars, a stronger dollar directly pushes their prices lower. These two forces are both firing at the same time right now, and that is why you are seeing both metals fall sharply today. But now I want to come back to the question of why silver is falling so much harder than gold. And this is where it gets really important. Silver has what analysts call a dual identity. It is both a monetary metal and an industrial metal at the same time. On the monetary side, it behaves like gold. It benefits from inflation fears, from currency debasement concerns, from safe haven demand. But on the industrial side, it behaves more like copper or oil. It is used in solar panels. It is used in electric vehicles. It is used in artificial intelligence data centers. It is used in electronics of every kind. And when rate hike fears rise and growth concerns increase, industrial demand for silver also comes into question. If the economy slows because the Fed raises rates, manufacturing slows down. Construction slows down. Solar installations might slow down. Electric vehicle sales might pull back. All of that means less industrial demand for silver. So silver gets hit from both sides simultaneously. The monetary headwind from higher rates hits it from one direction. The industrial demand concern hits it from the other direction. Gold only faces the monetary headwind. That is the precise reason silver is falling more than twice as hard as gold today. It is not manipulation. It is not a conspiracy. It is the mathematical consequence of silver's dual nature in a hawkish rate environment. Now I know what some of you are thinking. You are thinking, but John, what about the Iran peace deal? What about the good news? And you are right to ask, because this morning there genuinely was positive news. The United States and Iran have agreed on a 60-day roadmap toward a comprehensive peace agreement. Pakistan's Prime Minister Shehbaz Sharif confirmed it publicly. Qatar and Pakistan together mediated the talks in Switzerland. And this matters for gold and silver because if this deal holds, oil prices continue falling. If oil prices fall, inflation cools. If inflation cools, the Fed has less justification for raising rates. And if rate hike pressure eases, gold and silver can recover. That is the chain of positive events that this deal could set off. And I want to be honest with you. That chain is real. It is possible. It could happen. But here's what the market is telling you right now about that possibility. The market is not fully buying it yet. And the reason it is not fully buying it is that Iran already walked away from negotiations once this month. President Trump made strong comments about potential military action. Tehran suspended talks in response. Sources said they resumed shortly after, but the confidence was damaged. When a peace process suspends and resumes within the same week, markets do not assign it full probability. They discount it heavily. And that is exactly what you are seeing today. Silver tried to use the Iran news to climb back towards $65 this morning. And then the rate hike reality overwhelmed the optimism, and silver reversed back towards 63. The market tested the good news, and the good news was not strong enough to beat the Fed story. Not yet. But Thursday could change everything, and I mean that in the most literal way possible. Thursday, June 25th, is when the United States releases the Core Personal Consumption Expenditures Price Index for May 2026, the Core PCE. This is the single most important inflation measurement in the world right now for gold and silver investors. Not because it is the most accurate, but because it is the one the Federal Reserve watches more closely than any other number when deciding whether to raise interest rates. The Fed has said this explicitly and repeatedly. They watch Core PCE. They set policy based on Core PCE. And Thursday we find out what it says about inflation in May. Here is why this number is so explosive for gold and silver right now. In April, Core PCE came in at 3.3% year over year. The Federal Reserve's own revised year-end forecast for PCE is 3.6%. If Thursday's May reading comes in at 3.6% or higher, it is essentially a green light for the 9 hawkish Fed policymakers who are already projecting a rate hike. It removes their last excuse for waiting. It confirms that inflation is not coming down fast enough, and markets will immediately price in an even higher probability of a December rate hike. In that scenario, gold and silver face another significant leg lower. The support zone for silver at $60 to $62 comes into play immediately, and gold could test $4,000 for the first time since early in the year. That is the bad scenario for Thursday, and I want you to understand it clearly because the data right now is pointing toward that risk being real. But here is the other side of Thursday, and this is the opportunity I want you to fully grasp. If Thursday's Core PCE comes in softer than expected, say at 3.1 or 3.2%, the entire narrative flips. A softer PCE reading combined with falling oil prices from the Iran deal means that inflation is cooling faster than the Fed expected. That weakens the case for the 9 hawkish policymakers dramatically. Markets immediately start repricing the probability of a December rate hike lower. The dollar weakens, and gold and silver surge. In that scenario, silver could recover $3 to $5 in a single session on Thursday. Gold could jump 1 to 2% in hours. The investors who understood this setup and held their positions intelligently, or even added at today's lower prices, would see significant gains almost immediately. This is why I said at the beginning of this video that everything changes on Thursday. I was not being dramatic, I was being precise. Thursday's PCE number is a binary event for gold and silver. It will either confirm the hawkish Fed story and push metals lower, or it will crack the hawkish story and give metals the catalyst they need to begin a genuine recovery. There is no neutral outcome here. The number will move the market significantly in one direction or the other. So what do you actually do with this information between now and Thursday? Let me give you something practical and honest. The first thing is do not make panic decisions based on today's price action alone. A 3.5% drop in silver feels terrible when you are living through it, but silver has moved 3.5% in a single day many times in both directions throughout this year. The drop does not tell you where silver is going next week or next month. It tells you where sentiment is right now. And right now, sentiment is bearish because of the Fed story. But sentiment can shift very quickly when data changes. The second thing is understand your own position before Thursday. If you are holding silver or gold and you have not thought through the scenario where PCE comes in hot on Thursday and metals fall further, you need to think through it now. Not in a panicked way, in a calm, prepared way. Know what you would do. Know at what level you would add more. Know at what level you would reduce exposure. Having a plan before the data drops is the difference between making rational decisions and making emotional ones in the heat of the moment. The third thing is watch the oil price closely between now and Thursday, because oil is the connecting thread between the Iran deal and the inflation story. If the Iran 60-day roadmap holds and oil continues falling over the next 48 hours, it is a good sign that Thursday's inflation data might come in softer than expected. Energy costs drove more than 60% of May's inflation reading. If oil fell significantly in May, which it did partially due to early Iran ceasefire signals, Thursday's number could reflect that. Watch oil as your leading indicator for what Thursday might bring. Let me give you the complete picture one final time so it is crystal clear. Gold is down 1.5% today. Silver is down 3.5% today. Both metals are being crushed by Federal Reserve rate hike expectations, a strong dollar, and uncertainty created by Kevin Warsh's removal of forward guidance. Silver is falling harder than gold because of its dual identity as both a monetary and industrial metal. The Iran peace deal is positive for metals, but the market is not fully believing it yet because Iran already paused negotiations once this month. Thursday, June 25th is the event that determines the next meaningful direction for both metals. A hot PCE reading pushes metals lower toward new support levels. A soft PCE reading cracks the hawkish Fed narrative and metals recover fast. The trap right now is reacting emotionally to today's price instead of preparing rationally for Thursday's data. The investors who win this week are the ones who understand the mechanism, hold their plan, watch the oil price as a leading indicator, and are ready to move when Thursday's number drops. This is the big alert for Tuesday. Gold and silver are crashing today, but Thursday brings the number that could flip everything, and you now understand exactly why. You understand the mechanism. You understand the risk, and you understand the opportunity. That knowledge is worth more than any price prediction, because it lets you make decisions based on reality instead of fear. I am John A.G., and this is what we do on this channel. We go deeper. We look at the real data. We give you the honest picture so you can make confident decisions in a market that is doing everything it can to confuse you. Subscribe right now, because on Thursday morning, the moment that PCE number drops, I will be here breaking it down in real time, telling you exactly what it means for gold and silver, and what you should do next. You do not want to miss that. I will see you Thursday morning. Be ready.